Today, I'll be answering that age-old question of how is the market based on our stats, data, my own personal analysis from the real estate activities that occurred in and around Calgary in January 2021. Welcome back to another Calgary Real Estate Market update with us at Redline Real Estate here on Redline TV. My name is Darren Langille and I am one of the founders here at Redline, and I'm your host for these monthly market update series. In this video, I will briefly walk you through the key metrics you need to know to fully understand what is going on with our market. And at the end, I'll give you my few bits of advice if you are in the market to buy or sell as well. Now, your time is valuable, so let's get right into it. First of all, let's set the stage for what you've already heard in the last few weeks about our 2021 real estate market. On January 14th, headline, Calgary property values pounded by the pandemic as city sends out 2021 assessments by the Calgary Herald. Then January 25th, Calgary Real Estate Board predicts COVID-19 decreased demand for oil to hamper housing market by Global News. January 29th, Calgary Real Estate forecast to continue strong sales momentum, even see slight price growth by Calgary Herald once again. And then February 1st, just a couple days ago, Calgary Real Estate experienced the strongest January residential sales since 2014, CTV Toronto. So what is it? What is the true story? As it's nearly impossible to find time to filter through all the headlines and have the time to read the various points of view, today, let's focus on the facts, shall we? All right, fact number one. January was one heck of a month for us in terms of our sales. This was the best-selling January since the peak of 2014, and it rivaled 2013 as well. Those were big years for Calgary real estate, if you can remember. So that is saying something, that's for sure. Now, our Calgary Real Estate Board data reports 1,208 sales for the month. You'll see by the graph that I'm bringing up all month long, we were far outpacing the sales from January 2020. So what does that really mean? Numbers are just numbers unless they are related to something tangible. So here it is. We sold 40% more than January 2020 this year. This January had more sales than we even had in February of last year. And it was better than our month of December, which was a big month if you can remember. And it's something that didn't happen last year as we did drop from December to January. Now, that isn't the full sales story quite yet. Check out this little graph showing the climb of sales activity week by week throughout the month. See, with 1,208 sales in January, that equates with simple math to about 39 homes per day. And as you can see, these weekly sales per day numbers grew significantly throughout the month. Or in other words, the pace of our sales increased as we went along. Now, where we ended up over the last week of January puts us on a sales per day pace that is closer to what an April or an August feels like. Certainly not January. This is good news for those wanting to see continued momentum in our housing market. Now, fact number two. Where if you looked at our sales numbers alone, you'd even wonder if we were still undergoing a pandemic. Or for us in Alberta, a concern for this oil and gas sector that is just barely moving along. Our new listings to market and our overall active inventory would tell a more appropriate story to the times. In times like we are now, the caution flag is still waving for many, and that pause button as well. It only makes sense that less real estate consumers would have that full ability or even the concern to undertake a house move during these times. And that, I believe, is why our total inventory remains tempered. This graph here shows the continued downward trend in active inventory going all the way back to the beginning of August, when our sales activity was really starting to wake back up. You'll see inventory just never picked back up, and we started that inventory fall for which we sit at now. We finished the month with approximately 20% less inventory. That's nearly 1,130 homes less than on the market today 1 year ago. This gap between last year and this year grew throughout the month. From 942 was the difference, now all the way up to 1,132. The amount of new listings to market was about 10% more than last year, but it was easily absorbed by those increase in sales demand that I talked about earlier, that 40% number. Now, as low as our inventory may seem, this is also relative as well. Here's a chart from the Calgary Real Estate Board. This shows the inventory at the end of January for each of the last 15 years. When you look at the red line that I put on the graph, you'll notice that sure, it's a little bit lower than we're used to, but when you go all the way back to the beginning of 2005, 2006, and ramp it up till now, we are smack dab on average for total listings available for buyers to be looking at. So it feels tighter than we are used to, yes, but it's more in line with balance than with a heated market like many of our North American counterparts. Fact number 3. We've got the perfect supply and demand situation where one would expect to call for a price forecast pushing house values higher. See, with sales up 40% already and inventory down 20%, without any real semblance of rush of new homes to market to dilute those current offerings, it makes total sense why many are calling for an optimistic outlook for Calgary house prices. So what was that? Well, year over year right now, we recorded a 1.9% overall improvement in our benchmark sales price, up to $423,800. Now this number is higher than any figure we reported in 2020, but it's not as high as any month we reported in 2019. Now beyond benchmark price, there's another few indicators that shows us prices will at least hold or as predicted move up as follows. First, months of supply. 2020, 6. 2021, 3. Second, sales to new listings ratio. 36% last year, 54% now. And then third, sales to list price ratio. Last year, 96%, this year, 108. When we have half the months of supply coupled with nearly double the sales to new listings ratio, and then when our average sales to list ratio is above list price for a full month, the idea of a potential adjustment down is simply not possible. So as we sit right now, already in the second month of the year, it's safe to say that we can be fairly confident that our pricing picture has improved and we will continue to claw back to 2019 and maybe even beyond. Now, normally by now, I would have gone into greater detail on each specific property type, but I felt this overall market information was much more important to report on first to set the foundation. Now that being said, let's gloss over a few of those property type specific bits of data now. All right, let's start with sales. The highest growth was in the semi-detached market with a whopping 67% improvement over 2020. Then we have the detached at 42%, row houses at 33%, and even our apartments with an increase of 27% over the 2020 numbers. All right, now inventory. The lowest inventory position we find ourselves in is again in that semi-detached market with a total of 41% less homes on the market. Then detached came in second with 33% less. Row homes, third place again with about 9% less. And now even the apartments, it's shaken off all of that excess and it's finally sitting with a little bit less inventory 2% less for the first time in a very long time. And now pricing. Honestly, all were pretty close. From a 3% increase year over year on detached to just a minus 0.5% on apartments. And everybody else was just in between. Now, as you can tell, and as I always say, the dynamics are very different across the entire board. And they do change a lot depending on price range, the district, and even the community itself. Let me show you how we fared across those price ranges and across all those various districts just quickly as well. This is where you might want to pause the video. Now for price ranges, the green means we outsold last year by at least 5%. And as you can see, as you pause this, that we are certainly higher than that across the entire spectrum. Only a few little price bands had anything slightly less. And now as I pull that chart down, I'm gonna pull up the districts graph. This is one you see me show every month. Again, pause the video here to find where you are in the city. As you can see, across all the districts, things are acting differently. Now, if you're looking to use some of what I'm saying today towards like a decision-making purpose, please reach out because you need to have a detailed strategy call so that we can gear your specific situation to the market that you're in. It could look much worse. It also could look much better. So please don't leave it to chance. Now, as I leave you, here are a few of my last thoughts regarding those that are in the market currently buying or selling. It's certainly not the market that we're used to having at the beginning of the year. The sales numbers are firing on all cylinders right now. And our inventory continues to trend towards just modesty. To finish, I'm gonna pull up two more graphs to represent this in another way. The one on my left is months of supply. The one on my right is sales to listings per day ratio. So when we look beyond those headlines, the proof remains in the pudding right now that we have a stronger than anticipated market, despite all of the continued unemployment, the restrictions, the fear. I mean, you look around social media, the frustrations, oil and gas, and more. As we continue into February, our sales per day ratio is getting stronger. And the speed at which we're absorbing all the inventory that is on the market and also coming to market is also increasing. Simply put, it means our market is healthy right now. Now, many markets all around North America are in the red hot zone. And to me, this might seem exciting for some, but it's also incredibly scary for most. If I were to pick, I'd pick ours, as we have hit our bottom over these last 5-6 years. We've stomached some major setbacks that are already built into our economy, and as a result, we stand to manage coming out of whatever this pandemic situation is much more steady, consistent, and I would say fair. And in real estate, again, the term we use is balance. There is much call for caution in those markets as they are being deemed overinflated and in need to be prepared for a soft landing. Well, there you have it. We're done. Thanks again for watching another real estate market update with me, Darren Langill, and us here on Redline TV. Now, if you haven't yet subscribed to our channel, please do. If you liked what you see, give us a like, drop a comment, because we'd love to converse with you about what else you would like to know. We also drop many other videos throughout the month that are relevant to life in Calgary and specifically how it's going to affect your real estate. So thanks again for watching, and I look forward to chatting with you again soon.